Welcome to Smart Stock Watch. Today is April 23rd, 2025, and we're diving into Valmont's first quarter earnings report for 2025. Valmont is a global leader in providing products and solutions for vital infrastructure and agricultural productivity. Joining us today is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Valmont's report is quite interesting, especially given the current economic climate. I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Valmont reported net sales of $969.3 million for Q1 2025, a slight decrease of 0.9% compared to last year. John, what are your thoughts on this?
While the net sales saw a minor decline, it's important to note that in constant currency terms, sales actually increased by 0.5%. This indicates that Valmont is managing well despite currency fluctuations. Their operating income was $128.3 million, maintaining a healthy margin of 13.2% of net sales.
And what about their earnings per share?
Valmont reported an adjusted EPS of $4.32, which is in line with the previous year. This stability in EPS, despite the slight dip in sales, reflects disciplined execution and effective cost management.
Segment performance. John, can you break down the performance of Valmont's key segments?
Absolutely. The infrastructure segment, which makes up 72.6% of net sales, saw a decrease of 2.4% to $706.2 million. However, utility sales within this segment grew due to higher volumes and pricing actions. On the other hand, solar sales declined significantly, which was partly due to Valmont's strategic decision to exit certain low-margin projects.
And how did the agriculture segment perform?
The agriculture segment experienced a 3.3% increase in sales to $267.3 million. This growth was driven by strong international performance, particularly in the EMEA region and Brazil, which offset the softness in the North American market.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $4.24 based on a survey of 5 analysts. How did Valmont's actual performance compare?
Valmont exceeded the forecasted EPS by reporting an adjusted EPS of $4.32. This is a positive indicator, showing that the company is performing better than expected in terms of profitability, despite the challenging market conditions.
What does this mean for investors?
Exceeding EPS forecasts can boost investor confidence, as it suggests that the company is managing its operations efficiently and is well-positioned to navigate economic uncertainties.
Strategic initiatives and future outlook. Valmont has reaffirmed its full-year outlook for 2025. What strategic initiatives are they focusing on?
Valmont is investing in infrastructure capacity, which is expected to contribute to sales growth as the year progresses. They've also increased their quarterly dividend by 13% to 68 cents per share, reflecting their commitment to returning value to shareholders.
And what about their capital expenditures?
They invested $30.3 million in capital expenditures this quarter, which is part of their strategy to support future growth. This includes investments in both infrastructure and agricultural productivity enhancements.
Key takeaways. In summary, Valmont has delivered a stable performance in Q1 2025, with a slight dip in sales but maintaining strong profitability. Their strategic investments and reaffirmed outlook suggest a positive trajectory for the rest of the year. John, any final thoughts?
Valmont's ability to exceed EPS expectations and their strategic focus on infrastructure and agriculture position them well for future growth. Investors should keep an eye on their international performance and infrastructure investments.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Valmont's performance in the comments below.